All right, welcome out to today's advisory report. It is July 16th, 2026. Our gauges remain on green, although the market still in some sideways action, still bouncing around. Tough to make any headway right now, but price still over the 20-day, the 50-day, and the uptrend is still intact. As you can see, some of our performance today underperformed the S&P 500, negative 0.54 for the S&P 500. We'll see how things kind of transpire as we move forward. Doesn't make sense to blow everything out right now with it just being such a tight range. So we're going to just kind of hold on until we get a technical level that breaks down and we need to get defensive, or we get a technical level that confirms that we are going to be moving higher. Let's go ahead and jump into the charts and we can see what I am referring to. We are looking at the intermediate trend right now. This is the S&P 500, and we are looking at it and tracking it versus this orange line, which happens to be the 30-week moving average of the S&P 500. Looking back 30 weeks, taking the closing price on Friday, plotting it out as a line, and that's what we use for our intermediate trend to say, yes, we're bullish. No, we're not bullish right now. It still looks bullish, just looks like a multi-week consolidation. After a huge move up, that should be feeling good to us. We'll see if this thing wants to break down. But the good news is as we keep moving sideways, the 30-week moving average keeps moving up, making that distance from current price to 30-week moving average price smaller and smaller and smaller. We'll continue to watch that to see how that pans out. Let's jump on over to the short-term trend. And you can see the S&P 500 just really starting to kind of move sideways and consolidate. We had drawn this triangle on there that hasn't really panned out as far as being a break and a strong move up. What we'll probably end up doing here, and let's see if I can do it right now, we'll probably just draw another little trend line on here. I think that might be as far as I can get it to go. No, we'll just kind of draw that trend line and we'll see if we can get above that level next. As we actually did get above this high, it looks like. So, I mean, this is all-time highs. So we'll see. The question really be, can we thrust above this level? It's earnings season. Anything can happen at this point, and maybe some strong tech earnings or some other earnings gets this market out of this sideways action. Let's go ahead and look at some of the positions that we hold inside of the ultra aggressive account. Looking at Goldman Sachs, a huge couple days, if you look at from the gap up from this point all the way up, and then gave a lot back today, minus almost 5%. Still within the idea that we should be holding this in case it turns back up. Haven't hit our stop yet. CrowdStrike, at least a wick on the bottom, meaning that price came down and it was bought back up. Still looks good. And then we have Eli Lilly, LLY. And we bought that back in this area, a good move up. We took a little profit. It came back down. And now we're seeing, is this ready to turn back up? Let's go ahead and look at XLV really quick, as that is the healthcare ETF. And you can see same thing on healthcare, looking strong. So having Lilly might be, a good position to have if this thing wants to turn back up and continue higher. Why don't we go ahead and let's look at the NASDAQ really quick to end. Here's where most of the struggle is. You can see this is the tech heavy index. Here's the 50-day moving average, and we are below the 50-day. If this starts to break down, this will carry the S&P down a little bit, just not as much. But also we could find support soon, as this has been a multi-level support area. So maybe if we turn back up, we'll see what happens. But I could see this coming all the way down to this level, the prior wick low from that bounce day, and maybe this is the 100-day moving average. Maybe we see the 100-day or 100-day moving average sort of catch up maybe in a couple days. I could see it maybe even coming down to that level. If you want to look at previous highs, we can look at October 29th, draw a line across, and the 200-day is starting to converge with that area. Actually is just above that area. There's that spot right there, which you can see on the chart. Here and here was previous resistance. So resistance usually turns into support, so we'll see if we want to come down that far. Either way, we're watching the charts every day. We're watching the strategies every day. And we are making moves if we deem necessary to play defense. And we make moves necessary that we deem if we need to play offense. That's what I got for you today. Take care. Have a wonderful afternoon. We'll be right back at it tomorrow.